If you'd had a conversation at the start of the year with someone about gold, chances are that you'd have been told that buying it is a bad idea. Somehow, that's a narrative that's gotten quite popular. I've heard people call it a dead asset. And those same people usually say, just invest in the Nifty 50. Equity is the way to go. But look at the year so far, and while the Nifty 50 is up by about 15%, gold has gained twice that amount. Now, don't get me wrong. I'm not saying that you should sell your equity and buy gold. And I'm not asking you to make an investment decision based on what's happened so far this year. What I want to do is to talk to you about the advantages of holding gold. This Dussehra, on the first episode of Money Wise, that's what I would like to talk to you about. Joining me today is Harshvardhan Roongta, co-founder, Roongta Securities, and Rajiv Popley, the managing director of the Popley Group. Thank you so much, gentlemen, for joining me. And happy Dussehra to you.
Happy Dussehra to you too as well.
Okay, so let me start with a conversation about this narrative that has gotten created. And Rajiv, I want to start with Harsh on this because he's been advising people about this for so long. Harsh, we've had conversations over the years where we've spoken about the other end of the spectrum, where we're saying, hold on, don't buy so much gold, maybe buy a little bit of equity. Because of this financialization that has taken place, do you think in certain cases it's gone too far onto the other side?
So, well, Alex, I mean, it's apparent that investors, the retail investor or layman investor, would essentially chase returns. So, any and whichever place possibly gives them higher returns, I mean, you'll see the flow of money going into that direction. As an asset allocation plan, we've been always talking about having an exposure to gold to the extent of 10 to 15%. And that is excluding jewelry. So we're talking about pure investment. I mean, you have it in the form of a product, which could be a coin or a bar or ETFs or fund or in a gold fund or sovereign gold bonds, basically which you would not hesitate to liquidate. So that allocation would be 10 to 15%. But as I said, investors being investors, I mean, we are going to be chasing returns in any product. So if equity markets do well, we will see money flowing into equity markets. If you see that gold will start doing well and equity markets gets volatile, you'll find investors again chasing gold for that matter. However, as I said, I mean, it's prudent to have a good allocation to your portfolio. I mean, because we don't know which asset is going to perform how going further. So if equity, for that instance, has given about 15%, I'm talking about Nifty, has given 15% return, gold has given 30%. You don't know what it's going to be like in the next coming year, right?
Yeah.
So allocation to the right asset class based on your goals, time horizon, risk profile is very important. Invariably, gold as a commodity can be in your portfolio at all times to the extent of 10 to 15% for sure.
Okay, fair point. And Harsh has made the point very specifically that this does not include jewelry.
Exactly.
For years we've been talking about this, Rajiv, it hasn't changed. Because ultimately, let's face it, people don't go and sell their jewelry unless they're going to buy more. So it's not necessarily an investment. But I want to get something out of the way. A lot of people think about gold prices in India as determined based on demand and supply here. Is that true, or are we complete price takers when it comes to the gold that is sold in the global market?
Yes, Alex. In fact, now past with the open markets and the transparent pricing that works on in the entire industry, we are rupee to rupee with the international market.
Okay.
There's no Indian dominance of price. There's no local market monopolizing of the gold price at all. We are in fact even closer to that with the reduced customs duty.
Which happened, and
which
that's
is
when
the
you saw
recent
it drop.
phenomena.
Yeah.
So we could realize that there's no change in fact with the international pricing. There's no premiums that we talk about. We were in the days earlier in late 90s and 2000s where there was a very serious premium on the international gold price apart from the customs duty we're talking about. Today, we change, in fact, at our stores, we are pegged to the international pricing totally. So we have our own platforms where we disclose the gold prices on a day-to-day basis to the Indian consumers. And they can always recheck it with the international prices and, in fact, with the other jewelry retailers, which is very fair as a offering. The important part is what Harsh was talking about was probably 10 to 15% of the entire industry retail business, which is the investment part of coins, bars, so on to say. The rest is jewelry.
Yeah.
India lives on jewelry, the craftsmanship, the handcraft, laboring that India is proud of in the international market is jewelry.